Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, May 13, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Pretty quiet day, not that much on the docket today. However, let's take an assessment of where we are in the bigger picture. What's the likelihood of one thing or another happening? Where are we with the economic data news? Is this week going to be volatile, yes or no? Let's answer some of those questions so we can get a beat on the next move. We were using this breakdown candle high at 5:15:30 saying, hey, look, if they close the week above that high, which is also above this trend line, then she's no longer in a bearish stance, and we're going to turn back to the bullish stance at minimum of neutral, and we've done that. They're already working on / not too far away from the former all-time highs. The former high happens to be for 524.61. You have another breakdown candle high that comes in at 523.87. So you can see we're getting up into an area of the former highs and, as they say in the trading parlance, overhead resistance. Can they grind right through that area? Well, here's the situation, or the situation as they like to say. We've got some alphabet soup this week. We've got the PPI data. We've got the CPI data, producer price index, consumer price index. What is that? That stuff is a gauge as far as the market participants are concerned with what the Fed is going to do based on the inflation readings that they're getting. Are they going to continue to pull money from the market? Are they going to have a more dovish stance and add liquidity back into the market? That's good for stock prices. That's the levitating effect for stock prices. What is the Fed going to do? That's why the market hangs on the PPI and the CPI data. Can they use it as an excuse to goose the tape to new highs this week? Absolutely. Will they? We have no idea. We may be able to trade a reaction from the news, from the PPI and or CPI data. However, we're not going to guess ahead of time. The news comes out, the data comes out at 8:30 a.m. Eastern Standard Time. By the market open, they're usually already decided on which direction they're going as a result of the phony data and economic news. More bigger picture stuff. What happens if they do make a new high? What becomes the target? Well, as you can see, we have an upper trend line. Where does it come from? Well, let's scroll out. We'll pan back a little bit and we say, all right, look, we had a trend line that went from the March 2000 highs all the way through the 22 highs, the 2022 highs. Well, we have another trend line that goes from the 2007 highs through the same area, and that's the level we're seeing here. So when you go back to a daily chart and say, well, where does this come in if they were to spike them higher? We're looking at 532.50, 532, 533, 534, up in that neighborhood on a super spike or a continued rise to new highs. That's the next available trend line that we have in the sequence of trend lines. More bigger picture stuff from an intraday perspective. What happened today? Well, the spiders basically finished not far from where they closed on Friday, giving us a flat day, a rather narrow range. So what are they doing? Well, once again, same routine. And these are air quotes, waiting on the PPI, waiting on the CPI. They're waiting on the economic data / alphabet soup news to move the tape. More likely to get some movement on, as they say, turnaround Tuesday. Let's flip our mindset over to the intraday trading opportunities. Was there any money, even on a slow tape like this, to be made in the live room, inside the numbers? Did we have bona fide numbers Was anybody able to make money as a result of the numbers today? If you've had success, if you're finding it a valuable experience in the live trading room, post some comments under the video. Help a brother out. I'm not the brother. The brother are the other traders out there that are looking for answers. If you think you found an answer and you can help a brother out, pay it forward. Tell him what you found. Is there anything worthwhile inside the numbers, live room, just here in general? Here's a 5-minute chart of the SPY. Right of the vertical is today's activity. As you can see, based on Friday's close, we did have a gap higher open this morning. Had that work out? Let's check out the notes. Let's see what kind of numbers we have. Very simply, and you can pause the video, read the notes, go back to the chart. But even at 0 dark 30, this is at 0 dark 30. What time is that? That's about 6:15, 6:30 in the morning, a.m. Eastern Standard Time. We're putting numbers on the board. We have the bull case where we've got some unfinished business and overhead resistance up north in a tight zone between where? 522.75 and 523.50. As you can see, 522.75 was the front end of that overhead resistance zone. They came up a few pennies short. High of day was 522.67, so they essentially came up 8 cents short and went down for the rest of the day. Did we have traders that front ran the short place in the live trading room and or inside the numbers? The short answer is yes, we did. Why is that? Because they know we don't split hairs over pennies. Sometimes they come up short, other times they spike them through. Traders that have been around here over a long time understand that concept, that phenomenon, and therefore if they're interested in a short at 522.75, it's the same at 522.65, and if they're willing to short there, they're either willing to A, take the ride a little higher, or B, add at a higher price, reducing, or in this case, increasing their average cost. All right, what about the flip side? The flip side situation is getting down below 520.50, which is our pivot today. Now, there's more, but as you can see, the first hit, first time, best time situation, where have you heard that before? The first hit, which was at the tail end of our morning session in the live room, we were saying, look, here they come, 520.50. Traders interested in a long trade there, got the bounce, they got the ride, they got the profit. Pause the video, read the notes, and go back to the chart to double check the work. Again, before the open, 905, overhead resistance, 522.75, up to a little bit higher. Talking about the PPI, CPI data shuffle. Pause them, read them, go back to the chart, and double check the work. Right around the market open, the resistance zone, same zone, obviously. And here you go, 939. Down below, you have a gap. You have 520.50 as a pivot and a big fat round number of 520 just below. It's a support area where they should bounce the tape. And there's your big fatty at 520. So they bounced it at the pivot. They came lower later. They bounced it on the spike of the big fat round number, not yet got down to the next number, and then they floated them the rest of the afternoon. It pays to know your numbers. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. In the live room, we teach you how to take profits, how to hold a trailer, how to create a risk-free, emotionless trade. I'm basically holding your hand. I don't mind holding the trader's hand as long as they're not clammy. That's what we're here for. We're here to make you better traders. You learn, you experience, you make trades, you gain confidence. It's what's called a positive success cycle. Write that down. Put it on a sticky note. Check this out. We're switching gears to the automagical lazy swing trader algo system. This is a swing trade. The system issued a trade alert for Microsoft couple of weeks ago when the market was going down, just like the rest of them. 389.47 pretty much nailed the low. Exit today, 418.01. This is the first profit target, creating a risk-free, emotionless trade for the rest. This is how we hold another portion of the trade. But wait, there's more. Not only did we have a swing trade in Microsoft, but we also had a day trade from the live trading room in Microsoft. What did that look like? Looked like this. Here's a 5-minute chart. Check this out. Exit for the swing trade at the opening print of Microsoft today, 418.01. Spiked it a little bit by a few cents, collapsed all the way back down. What did we do in the live room? Took the long side at 410.93. Nailed the low of day. Exit profit swing trade, enter exit profit day trade. Same stock, same day. How you doing? How do you like them apples? We're a two-way trading opportunity. We do not discriminate. Another exit today for a swing trade, another profit target, 321 entry for Humana, profit target 340.55. Again, another risk-free, emotionless trade. How you doing? Base hits put you in the Hall of Fame. And by the way, before we get into Camp IWM, I should mention this week is regular way options expiration week. Weird stuff can and normally does happen. Expect a two-way tape this week. Plenty of volatility coming with alphabet soup, PPI, CPI, and anything else we got on the docket. The trend is your friend, and with Camp IWM above all the moving averages, she's in a bullish position. However, can she, this is a weekly chart, can she make a lower high and go back down, or will she test the highs or make a higher high? We don't know, and I repeat, do not know the answer to any of those three questions. That's why we have to use the charts to get us enough puzzle pieces where we can begin to put together the picture of what she's trying to say from a puzzle perspective. She's eating time off the clock above the moving averages. The trend is your friend. She's eating time off the clock to make another push higher to go where? Well, the next place we have of bona fide existence is around this breakdown candle high, 208.50, give or take. So if they eat time off the clock, they're looking to make a push up to 208.50, barring or minus coming down below the 50-period moving average and the low that exists from the 3rd of May. That would break the chain. That would change things. For now, they're building energy to get up to 208.50, give or take, as long as they stay buoyant in the position they're in, minus coming down below the low from the 3rd. Remember, Camp IWM is still in a wildly different position than the S&P, the Dow, the Qs. These are all at around new highs. They made new highs. They're back toward the new highs or the back toward the highs. This thing's not even close to its all-time high from 2021, November of 2021. This thing is a world away from new highs. Remember, this is my favorite market-leading indicator. This is where money destined for risk assets goes. Big picture is it's still not rushing into the IWM or the Russell 2000 making new highs. Not even close. Technically, this is still some kind of a bearish, wedgish, formation-ish kind of thing. It's a monthly chart. We can't do a lot with that. You can't really trade off a monthly chart. It's more of a guideline type of situation. What do we got going over in transport land or the folks down at the transportation department? Daily chart, last moving average line of defense is the 100-period moving average. They spiked it. They pulled back, put in a tail candle with a pseudo doji. Maybe that's a sign and or signal of a trend change. The transports is my second favorite market leading indicator. However, a number one canary in the coal mine. Tomorrow is an on-time type of situation for team transports. How you doing? This chart does not exactly resemble the spider or the Qs. They really are not in an on-time situation tomorrow, but the transports are favorite canary in the coal mine. Write this down, put it on a sticky note. Anything new to report with the Q people? Not really. They're above all the moving averages. Trend is your friend. They're approaching the former highs up in this area. It's all the same market. If everything's going to get a lift, meaning if the CPI, PPI data is going to cause new highs in the S&P, the chances are it's causing the same new highs in the Q people. Similar situation in the financials. They're flirting with the new highs. They made an attempt this morning. They reversed, closed on the lows. That's interesting information, but they're above all the moving averages. Trend is your friend. One day down, closing at the lows doesn't necessarily make a trend. It was down 17 cents on the day, 0.4%. We're not going to make a federal case out of that. However, below 41, we may call in a robbery. We may call in a federal case. Below 41 on daily closes. Staying above 41, she's bullish until she's not. What about Smashmouth, the Philadelphia Semiconductor Index? Flat today, no change since Friday. And based on last week, their eating time off the clock just over all the moving averages, or the 50 in this case, which is the last moving average up here. So is there any issue with the SMH? The answer is no. They're building energy, going sideways, eating time off the clock for another move higher. Where's the next move higher take you? Up to these highs over here, 230, 231. That's what they're working on. No magic. We're not going to overanalyze it. Take it at face value. Should get some increased volatility this week. Let's see what Tuesday brings. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible, and that is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.